Their seats. I know we had a very exciting panel on carbon markets. We've got another very exciting panel on leveraging on gender smart investing. So please take your seats. We're going to start in 30 seconds. And can I just call on my panelists to come to the stage? Thank you. You can sit anywhere. Yeah. Great. Thank you very much, everybody. Welcome to this session on leveraging gender smart investing to drive growth, new instruments and asset class. I'm delighted that on this panel we have a very diverse team. I think that's testimony to the fact that there is absolutely no doubt in anybody's mind that female entrepreneurship, female run businesses, female investors are vital to Africa's sustainable growth, and that there is a huge untapped opportunity to leverage on this female economy, and which is represented by about 42 billion financing gap. So I think if you are not in this space, you better get there quickly. So being gender smart and gender diverse represents a huge opportunity to drive impact, but also alpha. The statistics in terms of the impact tell us that women tend to reinvest their income back into the economy, up to at least 90% of their income back into the economy. So not only does it make sense to invest in a gender diverse strategy, you can be assured that you're going to achieve good returns, good alpha, but also have a very big impact on your economies and communities. So today, who we have on this panel are a group of pioneering investors, institutions that have come up with new structures and new instruments to tap into this opportunity. But first, we're going to start with a short video. So Tokumo Ishmael, who's the founder and principal of IDF Capital, which is the first private equity fund that has been intentional about investing with a gender lens, and they raised a $100 million gender lens fund. As you know, female fund managers are very few and far between. This is changing, which is really fantastic, and Tokumo and her partner Polo are part of that movement. And the fact that they've been able to raise $100 million from investors demonstrates a real understanding and commitment to this market, and has also opened up the opportunity for many other women-led fund management companies. So without further ado, I'm just going to ask for the video. Tokumo, unfortunately, is tied up with investor meetings, so was not able to join us here in AFSIC, but she did do a recording of her response to how Alethea IDF is using GLI in their investment strategy, how that's really driving returns for their investors, and what vision she has for a gender-smart approach to private equity in Africa. So let's have the video. Thank you.
From the very moment that we start looking at an investment, we're not just looking at the financial returns that investment can make, but using our own custom and pioneering Alethea IDF toolkit, we look at each stage of the investment from different levels to determine whether that company is gender strategic, gender proactive, or actually completely gender unaware in certain areas. Is the business woman owned or led? Are there women in the C-suite, at the board? And how is the business working along its value chain with women as producers and consumers? And how do those factors where women are present, how do they play a role in helping us to source the alpha on an investment? So it's financial plus impact, but right from day one when we start looking at an investment. Women company owners are underserved in receiving finance. I think the statistic is less than 5% of entrepreneurs, of women that are seeking financing actually receive that, and they make up less than 5% of all money that is deployed to small and growing businesses. So we primarily focus on women-led businesses. But then we also look at how can we help companies that are looking to scale and grow both male and female by benefiting from what we call the dividends of diversity, which is when you have diverse teams, and that includes ownership, that includes board participation, particularly if I can focus on innovation, for example. What are those products and services that need to have their business models reinvented or changed, or have new products and services developed such that you grow the pie for the target market that you're going after, because now you're intentionally focusing on consumers, female consumers, and beyond, recognizing that women are responsible for over $15 trillion of purchasing decisions in the world economy. So some of the investments that we've made are in the agribusiness. Where we're working with agro processing firms that are working with small scale holder farmers, where we're seeing huge impact in terms of helping them reduce their spoilage by processing at the coalface as they harvest, and also by helping them bring together their products in cooperatives such that they can then feed as a supply chain into larger organizations. We have two companies in our portfolio, Saltree being one of them, where that company is the largest producer of cassava and sorbitol into large multinationals, has had challenges in raising funding. How can we bridge that gap? Another one is Jetstream, where the founder is working in what we perceive to be a male-dominated environment of logistics, but is bringing logistics tech to clear up ports in West African countries and improving efficiency at these ports and improving supply chains for small businesses as they are able to get more efficient delivery of their products, whether for export or even raw materials going into their products. Again, a one-of-a-kind company. So working with all these different companies and being intentional, not just about their bottom line, but what are those things that can feed into their bottom line through innovation, better corporate governance, and effective decision making, and being intentional about having women along the value chain, because we believe that that brings dividends of diversity. But in terms of a number, in terms of financial returns, we're looking at a minimum of 3 times on our money. But more importantly for us is that we're looking at impacting on over 100 million households across the continent in terms of being able to have an impact through investments in these small and growing businesses, through the better product sets that are going to come out, through better accessibility and affordability for essential services. Well, the first thing I'll say is it's not just a moral obligation, but it's an economic imperative. The second thing I'll say is that we've just discussed that less than 5% of female founders are able to receive funding, yet in Africa, over 50% of small and growing businesses are led by women. About 50% of the population are women. And if we have not invested, and we see that as a challenge, then we need to intentionally place our gaze on solving this, because Africa and indeed the world cannot continue to play with half of its team. If you're a football team and you only send 5 men onto the field, you're not going to win the match.
Thank you, Takumba. Very well said. We are really out there to win the match, and we need to be leveraging on gender diversity to achieve that. So just before I turn to the panelists here, I just wanted to quote some statistics from the Collaborative for Finance. Drew is here, and they just launched a survey about what we're calling a new class of asset managers on the continent. We know that about 70% of the labor market is absorbed by small and medium businesses, and at least 40% of gross domestic product is generated by SMEs, a segment that these alternative capital providers are tapping into. And 1 in 4 SMEs across sub-Saharan Africa are women-led. Small business finance is the first asset class that is gender parity at the fund ownership management level. That means there are a lot of women that have come up with innovative fund structures to tap into this huge market of financing SMEs. Of all of these ALCPs, 40% are investing with equity instruments with a balance using self-liquidating instruments. 60% of these ALCPs are using open-ended structures, with the remainder using closed-ended structures. So a lot of innovation is happening in terms of the 2 and 20 that we typically see in private equity. So they're coming up with different ways in which to structure their funds. So about 70% of them are operating out of the normal private equity models. So to talk a little bit more about these innovations, I've got 2 speakers here, Brendan Mullen and Evelyn Diosimpa. Both, one is in South Africa and one is in Senegal. So both of them have come up with interesting ways to structure their funds that really leverage on their local jurisdictions, but economic context. So I'm going to first start with Brendan. So tell us a little bit about Secha Capital.
Thank you very much, Anne-Marie. And that was a great video, tough to follow. Secha Capital is a lower mid-market impact private equity fund in Southern Africa. So what does that mean, and especially how does that apply to Gender Lens? We had a small kind of first proof of concept fund, $5 million fund. We invested in 10 businesses, 8 of which were Black and female founded. How were we able to do that, in my opinion, and maybe adding to that, I think first it's the check size. Not to say that there aren't opportunities to invest in women with larger checks, but obviously the pipeline is deeper, wider, stronger at our stage. So our average check size in Fund 1 is about $250,000. Now with Fund 2, it's still small, differentiated. It's about $750,000. So creating a pipeline for those larger funds, helping grow those businesses. What's unique to us, though I don't know it applies to Gender Lens, but I would want to mention it, so we have an operator investor model. Though I do think that helps add to the the dividends of diversity that was just spoken about. One of our co-founders is in the back, Nambuso Kumbule. My other co-founder, Rashil, is not here. Those backgrounds are different: investment banking, medical doctor, strategy consulting. And then the team that we hired to do this operator investor model has been 75% women as well, and their first jobs in finance. So what does that lead to? Well, our first investment was in Native Child. This company, it's natural hair care for women of color. So often the joke I'll use, Anne-Marie, is not many guys that look like me from Boston know the difference between 3A and 4C hair. And that investment then led us to understand the wig market. So again, I don't know how many people here know the difference between Brazilian and Peruvian full frontal or 4x4. Well, we do. And these are really fantastic, large, profitable, fragmented markets. So those are the first 2 kind of female-led investments. But I think maybe to explain why the other thing that I think enables us to have this Gender Lens strategy of outperformance is we're very thesis-driven. And the majority of women we've invested in weren't pitching us. We actually found them. And not to say that women aren't out there looking for money or looking for venture capital or private equity, but that really, when you have that strategic insight, that thesis, and you want to go and find that business, that really unlocks a lot more opportunities. Because just to add to your numbers, sometimes I think the role I play is the American male is there's so much money to be made here. And I used to work at a hedge fund. Women portfolio managers outperform. You obviously mentioned a lot of the stats, and I think there's the BCG one with women-backed VC companies outperformed by 2.5x. And then I'll add just one last thing, and I'll pass it off. As I mentioned at the top, we consider ourselves lower mid-market private equity. A lot of maybe words there, but if you look at that segment of private equity in the United States, that's the one part of private equity in the US that receives just as much capital to women as it does to men. Because these are usually quote unquote boring, family-run businesses in sectors that are large, fragmented, profitable. And so it makes it a lot easier to find that deeper, more diverse set of pipeline when you're looking in that area. So again, what our belief to kind of keep pushing is, and I think there's some parallels here, is that differentiated check size and being very thesis-driven makes it a lot easier to create these general-end goals for impact, and just as importantly, we feel, for financial returns.
Brendan, before you pass the mic to Evelyn, just tell me a little bit about how the South African sort of legal investment context has helped you raise capital, and how have you structured your investment?
Sure. So the 12J is what you want to get at, and it has sunset, so I'll start with that kind of answer. But this was an incredibly catalytic piece of legislation and public policy. So the 12J is a tax break. So for about 8 years there, you're able to raise a fund, or really a holding company, so a permanent capital vehicle, I think you're also getting at, that was 100% tax deductible. So you're a high net worth individual, you give us 100 Rand, you get 45 back. So pretty amazing. I think it's similar to the VCT here in the UK that has also grown. So it really helped us get off the ground, this diverse first-time fund manager. It helped us write those smaller checks of $250,000. And since it's a permanent capital vehicle, we made these investments in some of these companies really expecting 10, 15, 20 years before the big part of the return is going to come. And it's just enabled us to be patient. So I didn't lead with that because our second fund is a 10-year fund. We're raising from institutions. I wish it were 20. But that's been massive. And I think that's a key to a lot of permanent capital, that patient capital really allows you to get in there, and not just earlier stage, but maybe some buy and build, some platform plays, consolidating some of these fragmented markets. I think it applies especially to FMCG and agribusiness. And those are the opportunities we see. It also then allows you to write those smaller checks via that platform. Then one of the next investments we're making in the agricultural space is via one of the companies we've already invested in into a women-led agricultural business nearby that is probably too small for our second fund, but it's now, we're able to invest in them because of this kind of unique structure of the buy and build strategy.
You recently got a commitment from RMB, is that correct?
Yes, I don't know if I'm allowed to speak to it publicly. I don't care. What are they going to do? Take the money away? So RMB Ventures is invested in us. We've signed an LOI. I don't know how official to make that. And it's because, and what we like about it, and this maybe expands beyond general lens, but it's SME investing. I think there's a bit of a stigma sometimes. I don't think a lot of funds have performed. And why not? Well, people are concerned about exits. Now we've lined up exits, the secondary market, which I hope will consistently improve and deepen. That is that missing middle. We're making these investments to grow these businesses so that they get large enough so that the big private equity funds, the on-balance sheet, the ones that have to write checks of $20 or $100 million can invest in them. So that's been fantastic. And they look at our portfolio, and nobody has a portfolio that looks like ours. Again, investing, I mean, the easy ones, yes, are natural hair care and wig companies. That just sounds different. But to hear that we have a battery storage company that's founded by a black woman is rare. And the renewable energy, I think, 2% diversity in that. And is that why we invested in this case? No, but we've found that a lot of the entrepreneurs that we've invested in that maybe aren't your kind of lock, stock, and standard, they know their industry that much better. They've had to bootstrap to get there. So they're not saying, hey, Secha, come and invest in us, and at this extreme revenue multiple and this burn rate that we're going for. But it's like, hey, we've bootstrapped it to this stage. We just need a little bit more help. And since we've invested in iGen, it's grown about 4x. We've been able to raise concessionary capital to women-led funds like Wombvest to help them buy more products in. And as our country's load shedding, it's nice to have a battery storage and a battery inverter in everybody's home to keep the lights on.
Thank you, Brendan. Evelyn, very different story. Senegal, your investor base is very different. Tell us about WIC.
Thank you, Anne-Marie. Indeed, Senegal is very different from South Africa. I wish we had that 12G. So WIC Capital is we're targeting 20 million USD open-ended vehicles structured in Senegal by the Women's Investment Club, which is a group of a little bit more than 100 women based in Senegal and Côte d'Ivoire. We launched the investment club in 2016 with just based on a few observations. You talked about the gender finance gap, the 42 billion, but when you look at Senegal first, realize that like only 3.5% of women entrepreneurs access loans through microfinance or banks. And when you look at the entrepreneurial ecosystem, you realize that women are like 30%, 31% of entrepreneurs, but which is not bad actually compared to the global average. But really, when you look closer and you see that we are 50% of the population, women are undereducated, underemployed, and underrepresented in the entrepreneurship space. And when they want to access capital and when they want to scale up their businesses, they have a lot of obstacles: access to capital, access to technical assistance, business supports. And from 2016 to 2019, we grew the club, and we were thinking about the way to structure that vehicle that would be intentional. In the meantime, the WIC Côte d'Ivoire came to life in 2018, so we decided to join forces while setting up WIC Capital. And our thesis is really to unleash the potential of these businesses that are operating on great value chains, but are very, very small. Just to set the stage, when we talk about SMEs in Senegal and Côte d'Ivoire, these are businesses that generate less than 3 million euros in Senegal, and like half of that in Côte d'Ivoire. And when you focus on women, they are generally in the smallest part of the segments. They do less than 200,000 USD per year. But there is potential for growth there. So we decided we will focus on that. And our thesis is, our agenda is straightforward. We only do women-led businesses. We only invest in women-led businesses in equity and quasi-equity. We also do self-liquidating with lots of technical assistance, of course, for pre-investment support and then post-investments. And I think that's also what differentiates us from classical, traditional actors. And because we are an open-ended vehicle, we have been able to deploy capital while we are fundraising. We have invested so far in 7 businesses in Senegal, about to do our first deal in Côte d'Ivoire, hopefully. So yeah, this is where we're at. We're still raising. We are really deeply rooted locally, thanks to that group of local women who contribute their time, their money. They are mentors, they sit on boards, they provide their expertise also to the fund management team.
So your investor base for WIC are Senegalese women that are placing their money through you into these businesses. Tell us what's the rationale for that? What was compelling for them to do that?
We had to start locally because when you look at the financial markets, traditional investors, bankers, were not able to reach that target. As I said, they are small businesses, unstructured, they're like key resources, so you need that intentionality. So for us, it was about just starting the movement. So we provided now 10% of the target size of the funds with our own funding, our own money. And now we are looking for more capital, because when you want to have larger impact, that's when you need institutions, right? So there was no definite rationale. It was just about rolling up our sleeves and starting something that would have an impact. And so far, the impact is huge. When I look at the businesses in our portfolio, like they are able to triple or multiply by 4 their revenue in 1 year post-investment. And they are creating so many jobs. And I always tell myself, imagine if you hadn't invested. And imagine what the impact would be if that effort was multiplied at a national level or at the level of the continent. The kind of growth that we would have, like in terms of just revenue growth, but also like the jobs that are creating, that it's more consumption it's so important for the continent.
So very important as part of that is that you're investing local capital. So your investors are local and you're investing in local businesses. How do you see growth there, and what kinds of investors are you trying to open your capital table to?
A funny story, when we started, I think we were very naive. We started trying to discuss with DFIs because for us it was development money. So it was supposed to be the low-hanging fruit, but we realized that we were, I think, too innovative, locally structured, open-ended, first-time fund manager. No way. There was no way we would get that capital. So we inherited our strategy. We are now talking to foundations, corporate foundations that are interested in the space. I'm happy to see that FSDA just funded the Niala venture. This is the kind of structures that are really intentional about moving the needle. But we hope there would be more actors like you to provide capital for the kind of actors that we are.
Thank you. I'm going to now shift completely differently away from specialist investment vehicles to a bank. So Aziz is with the with NMB Bank in Tanzania. And you have launched the first gender bond, I think, on the continent. I think there was one in Morocco and yourselves, and so the first one in sub-Saharan Africa. What led you to do that?
Good question. First, NMB is one of the largest banks in East Africa. And women proposition is a very important segment for NMB. And I think, Anne-Maria, you shared some very important and powerful statistics around the financing gap. And so it goes with NMB and Tanzania specifically. So we said we need to support this proposition. Not only access is an issue, but also affordability. And so we said, is there any way we can raise funding in such a manner that on lending to women entrepreneurs also becomes affordable? And so we came up with the idea to internationalize this, and we came up with a gender bond, so a social bond to specific. So, we figured out that, based on even the credit risk profile within the organization, it was interesting also to see that it has the least NPL, so non-performing loans. So the risk is lower than it is, if you talk about other segments. So we floated, a gender bond, which was very well received, as you may have known, about 297% oversubscription. With investors, from across, the geographies, domestic retail investors, domestic institutional investors, but as well as international, investors into the issuance. So really the reason why we had to do that was informed by demand for credit, but as well as, ensuring that we make it affordable. So we have a very strong women proposition on the asset side, and we see that growing, and I think it was only logical to diversify our sources of funding to make it, a sustainable, segment in the organization and the economy.
So you were 300% oversubscribed. Tell us about that, and tell us how you think that's changed the market in Tanzania.
It has. There's a lot of demand. With the first issuance, I think we've received good feedback from international community. They want to do more. And in fact, just about when we were closing the issuance, there was a lot of other new interested impact investors into the issuance. And I think that is interesting for us because we realize that not all investors are actually looking for just simply financial returns. I think impact is also becoming very, very important to most of the international investors. It was well received, and we have plans to actually to do another issuance because in terms of the use of proceeds, as I may mention also that this was also pretty much in line with the International Capital Markets Association principles and also pretty much aligned with the climate bond initiative. So we think that we can raise funding and in fact at slightly discounted rates, contrary to a lot of beliefs, it's actually can be slightly cheaper than traditional, conventional, bond raising, because there's a lot of transparency around, such particular issuances, use of proceeds, impact reporting, and I think investors are very keen in such, level of instruments that are very transparent, report and they're able to see, really that the funds actually go towards the intended, consequences. So we think there's scope to do more, and we plan to do that more. We're seeing, so far with what we raised, I think almost 60% of that has been put to use. So there's certainly demand for us to think about doing something similar probably in the next couple of months.
Great, thank you. Just one last question for you. The FSC Africa Capital Markets team worked very hard on creating a gender bonds standards and guidelines. How did that help you?
No, I did, and thanks to FSD Africa and other actors in the instrument, it did help not just NMB, but as well as our capital markets in Tanzania, and I think we're seeing increasingly interest from other, capital markets in Africa, to try and do the same thing, and I hope that FSD Africa will be there to support, and we look forward to working with you to, make that even more, to put it to more broad use, because demand for credit in Africa, in Tanzania, in East Africa is actually quite strong, and we think that it only makes sense to diversify sources of funding.
Great, thank you. Eugene, I'm going to turn to you. One of the, I think, one of the big events that helped move this market was the establishment of the 2X challenge. I do recall when Alethea IDF was raising their funds, they really did struggle to convince investors about their thesis, and then the 2X challenge was launched by a number of DFIs, I think led very much by Pierre Trudeau from Canada. Tell us a little bit more about the 2X challenge and how you're seeing it continue to support and move this market.
Thank you. And maybe I'll start with kind of the Citi journey. So Citi's a large global bank present in 98 countries around the world. I'm in a group called Social Finance, focused on social impact, and our journey started initially in microfinance. Aziz, perhaps like yours as well. And because we know women predominantly run small informal businesses, when you work in microfinance and fund microfinance institutions, we found out, wasn't really intentional at the time, that a lot of our money was going to women entrepreneurs. And so we now think we've reached about 5 million women entrepreneurs, mobilized nearly $9 billion of capital for the space. So we've learned, okay, women, yes, but the nice thing about microfinance is that it was homogenous. And from a metrics perspective, from a KPIs, it was all very standard. And as we moved away from, not moved away, but moved on, and with microfinance to access to basic services and development more broadly, we found out that actually the complexity of metrics and standards is exponential. So when 2X Challenge came along, it really created a standard for gender lens investing, and that's called 2X criteria. And just for a little audience participation, just so I know where we're at. If I say 2X criteria, do people know what that is? Raise your hands, don't be shy. Yes? Okay. Got some, okay. So for those who don't know, 2X criteria really is the standard for gender lens investing globally. Originally it was set up by a group of DFIs, and that was in 2018, and they made a significant commitment then to fund $11 billion. That's now been achieved, and they've now set a new commitment of $15 billion. But it's also now been formalized and spun out from a really steering committee into a standalone organization that is really on its way to doing many incredible things. But one of the things that it did for us is it created that intentionality. So we knew that we were reaching women because we were working with microfinance institutions, but as the complexity ratcheted up in other sectors, this really gave us a lens to figure out how do we really think about gender lens investing across all different types of asset classes. And I guess one thing that was quite surprising is because it came up with DFIs and a number of DFIs collectively, it's actually reasonable and quite easy to use. And for those of you that aren't familiar with it, really encourage you to look into it.
Eugene, tell us a little bit about the 2X Ignite. Can you talk a little bit to that?
2X Ignite.
Yeah.
Sure. So 2X Ignite, Evelyn, you probably wish it would have been around when you were getting going. So 2X Ignite really is a holistic, I kind of think of it as a holistic incubator for women led fund managers. And the idea is to create startup capital and incubate new first-time women fund managers, provide them working capital to get going, and then capitalize them as well. So it's a $200 million initiative that is now run by 2X Collaborative, and hopefully will spawn many more of you, Evelyn.
Great.
Actually part of those initiatives. I was saying that we are actually part of that community. So, yeah.
Yes, no, there was a co-creation where you engaged a number of different players in the market to come up with the facility. So we're really looking forward to the appointment of a manager to begin to allocate that capital. But just before we move on to another round of questions, there's talk about setting some industry certification standards. Can you tell us a little bit more about that and what would be the purpose?
Sure. So at the moment, if we or any other investor is doing a 2X transaction, there's a set of criteria, and it's really it's a self-assessment. You say, okay, does this transaction fit the 2X criteria? If yes, it's a 2X transaction. So that's good. It's helpful, but it doesn't create any third-party verification. There's no independent validation. So that's what 2X certification is going to be doing. It's really creating that accountability, transparency, and a international independent benchmark. And that's already now in progress. It's being operationalized as we speak. So that I think that's going to be kind of the next evolution of 2X criteria and taking it to the next level.
And just going down to city, social finance, so how do you express your own intentionality around gender diversity?
Yeah, thank you for that question. So when we thought about impact and what are we trying to achieve, because we work across so many sectors, it could be access to finance, it could be access to healthcare, education, SME on lending, etc. It's trying to boil it down and keep the impact quite simple, or at least as simple as possible. So this time last year, we made a commitment that we were going to reach 15 million low-income households by 2025, including 10 million women. So that's the commitment that we're now measuring ourselves on from an impact perspective. So it's pretty focused. So intentionality kind of equals focus. If you try to do too much, you perhaps lose the wood from the trees.
Great, thank you. I'll take some questions if anybody has any questions for our panelists or something to contribute.
Hi, Eugene. My name is Susan Payne, and I am about to launch a gender lens fund called Glide. But the reason that I'm bringing this up is that I looked at the 2X playbook, which is really very powerful, and everyone in this room, I hope, is familiar with it, because this is the 2X collaborative playbook. My question is this. I think that obviously 2X is really vital, and it does a fantastic service, but how much of that money, of the 11 billion, has been dissipated? How much has been allocated? Because it seems to me, and to many other women that I've met here, that it's very difficult to secure those funds, aside from the woman who have just said this on the stage and had reasons for that. I understand that. But if there's a female that has a 5 to 10 year track record who is launching a fund, and this is, I'm speaking for probably 10 women in this room, as a matter of fact, is 2X the place to go, and will it actually allocate funds?
Yeah, so great question. So I mean, I think 2X is on a journey. So 2X has just really been launched earlier this year, and in fact, at the moment, it's merging with another entity called Gender Smart. As all M&As go, it's kind of a combination of additionality. So there's a lot that they're still trying to get up and running. I think it started off and built off what essentially was a standards body, and then trying to build off of that and catalyze the sector. So yes, do go to 2X Collaborative. There are a number of different channels that they may connect you to, but really importantly, 2X Collaborative is still very much a member-based organization, with the members being financial institutions, whether the development financial institutions, banks, we're the only founding bank, but pension fund associations, et cetera. And that's a really good way just to be directed, because all of them will have different investment theses, and depending on where you're at and what you're looking at, the asset classes, et cetera, you'll maybe directed different ways.
Any other questions? So, just before we go around to take some more questions, to field some more questions to the panelists, I want to make an announcement, actually. So FSD Africa Investment, really to your question about where's the money going, has created a small facility because we don't have deep pockets and we are trying to be catalytic, but we've created a small facility called the Nyala, the FSDI Nyala facility, which is really designed to provide capital into funds like SECHA, like WIC, so these alternative local capital providers. So we're doing this on our balance sheet in order to demonstrate how this can be done and how we can channel more capital to these asset allocators on the continent. We've partnered with the Collaborative for Frontier Finance, and they're doing a lot of work to educate the investor community about these asset managers in order to really begin to understand how do we invest in them differently. In addition, we partnered with Nyala Venture, which is a fund manager that's actually going to be identifying and recommending the investments into these managers. And the announcement that I want to make, because we launched this in Tanzania, in Dar, I think Tanzania is going to become the hotspot of innovation and gender investing. And so I'd just like to really welcome and congratulate Diago Dié, who's come from Senegal as well, and is going to be a co-partner with Bart in managing this facility. So Diago, I don't know if you want to just say a few words. I know it's basically your first day on the job.
Thank you. Thank you very much, Anne-Marie. It is my first day. I've been appointed like an hour ago. So, but just like you said, Anne-Marie, Nyala Venture, our mission is to facilitate access to capital for small and growing businesses. And we do this by supporting local capital providers like WIC Capital, SECHA Capital. And what we want to demonstrate is that SJB finance can be a commercially viable asset class on its own, just like VC, just like PE. And the best way to do it is to support these local capital providers in order to achieve that. So we're going to do that at 3 levels. We are going to be anchor investors into these vehicles. So when Elvin mentioned that they are targeting a $20 million fund and they already put in 10%, and that they have difficulty accessing institutional capital to close their fund, that's where we intervene. So we want to anchor those type of capital providers for them to be able to demonstrate that they can be viable and be a commercial asset class. So that's the first thing we're going to do, so invest as anchor investors in those funds. The second thing we're going to do, and that's in partnership with CFF, is to provide capacity strengthening services to these fund managers, because sometimes we forget that these are entrepreneurs investing in entrepreneurs, so they need business development services. And the third thing we're going to do, and that is usually looked over, is that we're going to provide working capital funding to these fund managers for them to be able to run their businesses, run their funds, run their operations while they raise a bigger fund. And I would like to maybe close by thanking FSDAI and CFF for the trust they have in Nyala Venture, for trusting us to run this facility. And I would also like to say that thank you to FSDAI and CFF on behalf of all the female fund managers, all the female capital providers, all the female intermediaries who are playing a significant role in delivering capital to build strong and sustainable businesses across the continent. Thank you.
Great, thank you. And we are always open to bringing in other investors into our facilities. So if you're keen to come along with us on this journey, yes, it might be risky, but I think they'll have a lot of impact. So please do get in touch. But before we end the session, I just want to go around again to our panelists and just share with us what you are seeing, particularly because Africa has a very high youth population, and a lot of that innovation that's coming is coming from that youth population. A lot of highly skilled, first-class professionals that are seeing problems in their economies and coming up with these innovative solutions. So just share with us what you're seeing, and how do you see this market continue to evolve and grow? Who should I start with? Eugene?
Sure, I'm happy to start. When I think about, so I've been in this space since 2010, and initially when we were looking at companies who were serving the bottom of the pyramid in emerging markets and in Africa, many of them were, I don't know, the Stanford grad, stereotype, and that is changing. That is changing. We're seeing more local entrepreneurs who have a better understanding inherently of the local problems and will have better solutions. It's not just that there are more local entrepreneurs who are able to get companies to similar level of scales, but actually they now have the same access to tools and the same aspirations to go public on the LSE or whatever, and that is different. I mean, we haven't seen that. I didn't see that 5 years ago, but I've seen that over the last couple of years.
Great, thank you. Evelyn?
When I look at our portfolio and our pipeline of female entrepreneurs, beyond the sectors, because we know that women are concentrated on the agriculture value chain, which is like a major value chain for Africa, where we really have something to bring to the world. But what gets me more excited is like their commitment to always service their communities, whether they are women or just the general community, in the products they have, the services, and their commitment also to just contribute to the development by creating jobs and empowering their teams. And it's always bring me back to the fact that when you're investing in a female entrepreneur, actually you're checking also all the other 2X criteria like value chain impact, impact on the consumer, and like having female employees at key positions with sufficient salaries for them to continue to grow and support their own communities. This is really what excites me when I look at them.
Yeah, I think for me, what I'll say, the few days we've been here, I've come across so much capital that is actually looking at, new asset classes. And for us, what we need to do really is go for it. There's so much capital out there that I think we could convert into good economic use, back in the African continent. That's what I can say. So a little bit more innovation, but investors also expect a lot of transparency, and I think that's probably what we need to work on. Otherwise, there's so much capital out there that we need to deploy into, especially the women's proposition. Thank you.
There's a lot of capital on the continent as well.
Yeah, That's so true.
as you've demonstrated.
Yeah, your question is about the youth, and I think it's a good segue from Aziz. We often focus on the financial capital, and that's important, but I believe we have it such as that human capital is just as crucial. And in order to get this demographic dividend that you speak about, we fundamentally believe we need to redirect the flows of high-powered human capital. Part of the reason SETCHA was founded is because we looked around at our Bain onboarding event, and the VITs and the UCT grads were all working for this multinational, or going to work for KPMG, Goldman, Unilever, Coca-Cola. I don't begrudge them that, but let's give the youth an opportunity to redirect where they work, to maximize their impact and their experience. That's why we're such believers in this operator-investor model, is that we don't need a Marshall Plan per se. We need an arsenal of operator investors. We need to solve these problems from the bottom up, not top down, from internal, not external. And the only way to do that is to give them those opportunities to maximize where they can have impact and a career.
Great, well said. Thank you very much. So let's give our panelists a round of applause for being the trailblazers. Thank you very much, and we wish you the best of luck. Thank you. Thank you, everybody.